December 9, 2025. Financial media across the world erupted in celebration. China had just announced a $1.76 trillion trade surplus. The first time any nation in history had crossed the trillion-dollar mark. Bloomberg called it resilience. The Wall Street Journal declared China had won the trade war. Even Chinese state media celebrated it as a final victory over Trump's tariffs. But here's what they missed. At the exact same moment China announced this record surplus, something far more important happened in the background. China's foreign exchange reserves surged to $3.346 trillion, the highest level in 10 years. And if you understand what I'm about to show you, you'll realize this wasn't a victory. It was a trap. And the more China wins, the tighter that trap closes. My name is Host, and you're watching Financial Revelations. Today, I'm going to show you how Trump used just $17 billion to create a financial black hole. One that is now pulling in China's trillion-dollar surplus with no mathematically possible escape. What everyone saw in November 2025, China's customs data revealed something extraordinary. Despite tariffs, despite the trade war, despite everything, China's exports grew 5.4% year over year. They didn't just survive, they adapted. Exports to Europe jumped 8.9%. Southeast Asia surged 14.6%. Africa exploded 27.2%. Yes, exports to the United States collapsed 28.6% in November alone. But China simply found new buyers. The narrative was clear. Trump failed. Tariffs didn't work. China won. And then came the reserves. $3.346 trillion in foreign exchange holdings. Gold purchases for 13 consecutive months. Official gold reserves now at 234 tons, with another 30,000 ounces added in November alone. Every indicator screamed strength. Every analyst celebrated resilience. But financial traps always look like victories, right until they snap shut. The move no one paid attention to. While the world was distracted by trade data and headlines, Trump made a move on March 6, 2025 that changed everything. An executive order. The creation of the U.S. Strategic Bitcoin Reserve. 200,000 Bitcoin. Worth roughly $17 billion at seizure prices. Acquired entirely from criminal asset forfeitures. Not one taxpayer dollar spent. The media covered it for maybe 48 hours. Bitcoin actually fell 5% on the announcement. Crypto bulls were disappointed. Wall Street shrugged. It looked irrelevant. But then Trump's crypto and AI czar, David Sachs, said something that almost no one understood at the time. The United States will not sell any Bitcoin deposited into the reserve. It will be held as a store of value, a sovereign reserve asset. Not gold, not dollars. Bitcoin, a digital Fort Knox. That single sentence changed the global monetary game. Why China's victory became a trap now, overlay that decision onto China's so-called success. China's $1.76 trillion trade surplus means one thing: dollars. Every shipment to Europe, every sale to Southeast Asia, every container sent to Africa, they're paid in US dollars. The more China exports, the more dollars they accumulate. And here's the problem. China has been trying to escape the dollar for 2 full years. Their U.S. Treasury holdings fell from $860 billion in January 2023 to $759 billion by December 2024. 9 consecutive months of selling in 2024 alone. They were executing a clear de-dollarization strategy. Selling treasuries, buying gold, diversifying reserves. But their record trade surplus forces them to accumulate the very asset they're trying to escape. Their dollar reserves are now at a 10-year high. Think about that paradox. They're running from dollars, while dollars chase them down at $98 billion per month. It's like trying to outrun a door that grows faster than you can run. China's 3 choices, and why all of them fail. Trump's Bitcoin reserve forced China into exactly 3 options. There is no fourth. Option 1. Hold treasuries. That means financing the country that just declared Bitcoin a sovereign reserve asset. You're funding the system that's replacing you. Option 2. Sell treasuries. But dumping treasuries crashes the value of your remaining 759 billion position. You take massive losses. And worse, you validate Bitcoin as the alternative. You trigger the panic you were trying to avoid. Option 3. Buy Bitcoin. But that means publicly admitting dollar weakness, confirming Trump's strategy was right, and driving up the price of an asset the United States already owns 200,000 units of. You enrich your adversary with every purchase. Every option tightens the trap. The Forex data that proves it. December 7, 2025. China's State Administration of Foreign Exchange releases new data. October reserves, $3,343 trillion. November reserves, $3,346 trillion, only a $3 billion increase. Sounds small, until you understand the context. In 2024, China sold roughly $100 billion in U.S. treasuries. They were executing their exit plan perfectly. And yet, despite selling treasuries and buying gold, their dollar reserves are at a 10-year high. Why? Because the $1 trillion trade surplus is flooding in faster than they can get out. They're bailing water with a cup while a fire hose fills the boat. The soybean trap. October 2025. China announces export controls on rare earths. October 10th. Trump responds. Starting November 1st, the United States will impose a 100% tariff on China. Total tariffs would jump to 147.5%. Trade destroying. China blinked. At the November APEC summit, a deal was struck. China agreed to buy 12 million metric tons of U.S. soybeans by December 31, 2025. 25 million tons per year through 2028. Total cost, $120 billion. Here's the trap inside the trap. Those soybeans are priced in dollars. China earns dollars from trade, then is contractually forced to send those dollars back to the United States. A closed dollar loop. Earn dollars. Spend dollars. Repeat. There is no de-dollarization path inside this structure. The performance gap that makes escape impossible. Since March 6, 2025, Bitcoin, 8.2%. U.S. Bitcoin reserve, $1.4 billion unrealized gain. China's treasuries, 10-year yields rose from 4.2% to 4.6%. Bond prices fell. China's losses, $30 billion. Let that sink in. The U.S. made $1.4 billion doing nothing. China lost over $23 billion doing everything right. That gap widens every single day. Why Bitcoin becomes inevitable? China's gold allocation is just 6.9% of reserves. Global average, 15%. To reach the average, China needs $192 billion in hard assets. Gold? That would require 1,430 tons, nearly half of global annual production. Impossible. Treasuries? That's surrender. Bitcoin? At $92,000, that's 2.08 million Bitcoin. But only 3 to 4 million coins are even available on exchanges. China alone would absorb 50 to 70% of available supply. Now imagine multiple central banks moving at once. The price doesn't rise. It explodes. The timeline. By Q2 2026, China's reserves cross a threshold where intervention becomes mandatory. They can't buy more dollars. They can't dump treasuries. They can't source enough gold. They must diversify. And every path leads through Bitcoin. The final irony: China will buy Bitcoin to escape the dollar trap. And in doing so, they'll make Trump's $17 billion position worth $100 billion. They'll validate the strategy they tried to defeat. They'll fund their own cage. This was never a trade war. It was monetary engineering. And it's happening right now. The math doesn't lie, the timeline doesn't forgive, and the trap doesn't reopen.